Well, let's tweet away once we get the tweet, and then we can jump in.
Do you have your coffee there this morning, David?
I have it right in front of me. I haven't had it just yet, so
There's not a Starbucks between you and your office there, though.
no, they have a coffee station here.
Oh, okay.
So I usually make it before I leave, but what is better, BTR?
BTR. BTR. All right, ready to go?
1 second. Yeah, I guess we're ready to go. I'm not used to starting without music, so we're gonna have to start. Let's bum, ba, 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 ba. Is that close?
You sound pretty good, buddy.
All right, thanks. Some people say it's almost like being with a professional musician, hearing me.
That's exactly what I was thinking.
Yes. Well, good morning, everybody. With that non-musical beginning, it is September 21st. This is Wall Street Beats. I'm joined by Bob Morris, Ben Bry, and we're going to talk about stocks. We're going to talk about oil and gas. We're going to talk about a stock that's gone from 16 to 72 since one of our partners recommended it or said that he was buying it. So in a very short period of time. So what do you do after that? But let's start, Bob, with oil and gas and power generation and power needs. Do we need more power, and why?
Oh,
How should we play?
we always need more power. So I was watching on the news channels yesterday this announcement between OpenAI and NVIDIA, and that they're going to build 10 gigawatts of these data centers that NVIDIA is going to invest $100 billion into. And I'm sitting there saying, wow, that's a lot of power that they're going to need. That's going to be a lot of consumption. And so this morning, a lot of the press is picking up on the fact that that is a lot of power. And do they restart some of these nuclear facilities, 3 Mile Island or Indian Point, and where are they going to get all this power? And at the end of the day, it's a lot of it, a bulk of it probably is going to come from natural gas. And so you see a lot, all the gas names are up this morning. We talked yesterday about Expand Energy being my favorite natural gas name, and followed by EQT. I think one of the Wall Street houses raised their price target on EQT to $63 per share this morning. So everybody's sort of running around saying, okay, how do we play this from the power side on this big announcement between OpenAI and NVIDIA? And, you know, I'm, as I mentioned yesterday, I'm already overweight Expand and EQT. Don't own Intero or Range, which are the next two big natural gas focused names. But um, actually, yesterday, before the announcement on NVIDIA and OpenAI, and after the call, I did add a little bit more to Expand Energy just because I want to. I've been waiting to buy it below 95 again. I'm just afraid it's not going to get there, but I'm trying to be patient. We're still in this shoulder period for natural gas demand, where natural gas is still below $3. And I'm looking here this morning, and yeah, it was 280 or bumping up a little bit here, but hoping I'd have some time before the first big hit of winter weather hit to drive up natural gas prices. But you know, if you don't own energy here, and I know you asked me this last week, David, if you don't have any money in energy, what do you buy here? And I mentioned it at the Barclays Energy Conference 2.5 weeks ago that investors are predominantly looking at all these natural gas names on this whole theme of power demand for OpenAI or for States data centers and for LNG exports. So if you don't own anything, I hate to chase them on a day like today because everybody's running out saying, "Oh, I got to buy Expand Energy and EQT and these gas names on this announcement." But I would first look to buy Expand Energy, and that's my favorite name. It's probably below the radar screen of a lot of other names. People always mention EQT because it's well known, but Expand Energy has only been around as Expand Energy for less than 2 years. It's the former Chesapeake Energy. They pay the best dividend among the pure natural gas focused names. They've got pristine balance sheet now, and they even paid a special dividend. So if you don't own anything and you have to buy energy today, I would buy Expand Energy, EXE first, and then probably EQT, and then move down the list to Intero and Range. But I'd be a little bit patient here just because I hate to chase names on a day like today when they pop on this news. And natural gas prices probably aren't going to start to move up sharply until we get into the winter. But this is big news. If you look at 10 gigawatts, that's adding over 2%, just a little over 2% to our total power consumption in the US. Granted, that 10 gigawatts is going to be over several years, but still, that's just the latest incremental um, project that's going to add to demand for power, and that power is predominantly going to be natural gas. It's not going to be That's not going to be fulfilled with solar or wind. Maybe we'll start up some of these nuclear plants. We'll see how that goes. But natural gas power generation is going to be the predominant source of energy for these data centers.
What's incredible is that younger people will be really quick to tell you that OpenAI or AI searches use 10 times, 20 times the amount of power that a regular Google search does. But you don't see protests around the AI facilities or anything like that. So it seems like this is the future of search. It seems like you get better results. But you mentioned Intera and Range. What are their symbols?
Intero is AR, and Range Resources is RRC.
Okay, so you have EXE, EQT, AR, and RRC.
Yeah, and if you're looking at an oil name that has exposure to natural gas and has some LNG export capacity, EOG would be the name that I would then look to if you want to, maintain some oil exposure but have some natural gas exposure too.
So Ben, one of the things that we talked about earlier in the week, I think, or maybe last week, that all of these things, it's hard for all of these things to be true, right? That we're going to build this much power supply, that NVIDIA is going to buy, is going to have X amount of chips, and so and so is going to spend $100 billion in building out CapEx, and so is going to spend $300 billion. I mean, what you're really good at looking at the other side of things. What's the chance that this just doesn't materialize? That the build out of this much power just doesn't happen?
I think it's pretty high, to be honest. Every one of these things are non-binding agreements. We saw this happen during the dot-com 25 years ago. You'd have these revenue round-tripping schemes. I mean, NVIDIA has already paid fines to the SEC for doing this 25 years ago. This isn't their first run at the rodeo. And, they jack up the stocks. And, look, the idea of NVIDIA investing in OpenAI to buy NVIDIA chips and pay Oracle, who pays NVIDIA, and it's this very circular thing. There is also still no revenue model. Like, the idea, imagine Wall Street Beats, like, just guaranteeing spending for the Oracle deal, for example, which was, I thought, the peak stupidity, $300 billion. Well, these guys have $12 billion of revenue, okay? And they're losing $7 billion of cash. How are we taking something seriously where they're like, yeah, we're going to spend $300 billion, you get $12 billion of revenue? You know what I mean? Like, we're going to give you all the credit that you actually can pay the bill. You know what I mean? And where is it being funded by? It's being funded by investors. Well, we all know how that ends. It ends the same way every time. It's a Ponzi. It's like, until you have a sustainable model, this is not. I don't think it should be taken seriously. Like, and the market's taking it so seriously that you're in a situation where, everyone wants to capitalize it. But, like, the reality is what you said just a minute ago. This is, in my mind, it's search 3.0. It's better search. There's no question. I think that's one of the reasons why Google traded poorly this summer, although now it's coming back. But there's no general AI here, and the idea of that more power, more compute would lead to scaling. It just isn't. It doesn't scale with complexity. The LLM, like underlying models, like they break down with complexity. So yeah, it's better for search. It's kind of better for productivity in the sense of, oh, I need some code, or So it's like, the way I think about it is, it's Search 3.0 and Microsoft Office 3.0 or 2.0 or whatever. Like it's better for those things, and it's great, but I don't think it's this. It's not the same as like impact as the internet. But regardless of all that, I think that these non-binding agreements, they look sexy on paper, but it's kind of like a lot like what Trump's doing. Like, oh, Japan's going to invest $3 trillion. It's like, okay, we'll see. We'll see what actually materializes, right? It's easy to get excited when there's these headlines out, but you see all kinds of crazy stuff. Like I've dug in like Meta and CoreWeave. I mean, Nvidia's doing the same thing with CoreWeave, right? Like Nvidia underwrote 25% of CoreWeave's IPO, and they just announced that they're going to rent $1.5 billion of their chips. So they sold their chips, and they're going to rent their chips back from Lambda, a smaller version of CoreWeave. So I think that there's a lot of gaming going on here, and it's right now because it feels like we're in a bit of a mania, right? Like, every day stuff. When was the last time stocks are down? I think the first day of the month, maybe. Like, and so I think that I talked to a lot of investors. I think there's a lot of knowledge of like how this ends, and the underlying shenanigans going on. But do you want to be on the other side of it? Like, I've tried to like fade some stuff this quarter a few times, and that hasn't worked very well. Like even Oracle being the best example. Nadine got me to not short that like right when I got back after Labor Day, and then you get like a 40% move higher. Like, who wants that in their life, right? So I think there's like a sense of, when the music stops, there'll be a lot of supply really fast too. But until there's like some signs that this is slowing, there won't. It's just people don't want to be on the other side of it, basically. And these,
Yeah,
go ahead.
Yeah, I was gonna say, it's interesting because you have the search side of things, right? And AI is, I would argue, much better at search because it's not ad driven. But that's the problem; it's not ad driven. So,
Well,
and
they're starting to, though, right? Like OpenAI hired away the head of ads from Meta, so they're making them, and they dropped their prices against Anthropic. So they're coming in with the idea of becoming search oriented, because I think the subscription model doesn't have enough revenue for all the spending, basically.
yeah, exactly. There's very few people that are going to spend $20, $50 a month just for better search. But then you get to the
even if you did, like, imagine you had 300 million people do it. Okay, so that's 6 billion, so it's 72 billion of revenue. If you got 300 million people to pay, which is a lot, right? Well, that's still not enough. 72 billion in revenue, and it's lower margin than traditional search because the cost per query is much higher, and that's where the power demand that Bob's talking about is coming from. So I don't know, maybe the profit pool is 20 billion, 15 billion, right, on that model. And we're just talking about all this trillions. We're talking about trillions of dollars of capex. Like, just that the math doesn't work.
Yeah. So what I was going to say is,
just came out and said $800 billion gap between an $800 billion revenue gap, basically.
So the reason I ask it is because I'm kind of torn on it. On the one hand, I clearly see this kind of non-consensus view of, and also minority view of, yeah, this could go wrong a few different ways. But on the other hand, I think there are some applications that we just haven't seen yet, like agency applications for AI that will make things, well, would you pay a certain amount a month or as a product to have something answer all your emails, or and follow it through to different agency things. But Bob, what do you make of all that? What do you make of that that
Well,
back and forth?
it seems like there's a race going on. You've got all these search providers trying to outspend all their competitors to be the dominant player at the end of the day. And it doesn't matter what the model is, you just got to spend money so that you're the winner at the end of the day. And it sort of reminds me of, if I go back 20 years, I think there was a bank CEO that says, if the music's playing, you got to dance. So if everybody's out there, trying to beat the other guy and you got to be in the race, at the end of the day, like Ben said, it doesn't end pretty. That's sort of, not that it's an
Yeah,
exact analogy, but that's sort of how the banking crisis happened, is everybody was trying to compete against each other and saying, well, I got to be in the game. I got to be the winner. It doesn't matter how much money I spend or how I lend to who or whatever. This is the same game that's being played. Everybody's spending as much money as they can, so that at the end of the day, they're the survivor or they're the winner. They're the best search engine, and they don't care what the financial model is right now. They just got to spend, spend, spend.
yeah, and there's Chuck Prince who said that at
Yeah,
Citigroup.
yeah. I knew it was Citigroup. I just didn't want to throw any names out there, but yeah,
well, no, it's a great quote. He's very accurate. That's why we're still quoting it, 18 years later, and I think it's right. And so that's why I think about it, and I've been starting to look at the actual cash flow, and I think Meta has some serious cash flow issues, which is crazy because they have 115 billion of cash flow from operations. It's crazy to have cash flow issues when you have that much cash flow, but but all it's going to take is Meta or somebody to say, okay, we're slowing or declining the capex, and that will be it. Like that will be the writing on the wall, essentially. But until then, like you said, the music keeps going on. But they can't all be winners, so that's how also, right? Like, there's what industry do you all have like 8 winners, 7 winners, whatever. Like, and so this idea that they all are all in trying to win at the same thing,
Yeah, like
it's
right,
cool.
like right now, you might have a couple people who have a few different AI subscriptions because they're still playing around with them, seeing what they, but almost no one does that. And on top of that, think of it in 5 years for the mass market, are you going to have, when was the last time that you searched something on Google and then said, oh, let me check to see what Yahoo says? Or
Yeah, it's
ask
great. Or
Jeeves.
or
Oh, wait a
Bing
second.
or
Ask
Bing or
Jeeves.
Bing or
Yeah,
Bing
I want to
Bing.
see what Bing says on this. Oh, the results are so different. Look at this. It's just not going to happen. And so you're right. At some point, you're only going to need one email manager. You're only going to need one thing that will make phone calls for you to set up a restaurant review, and you're not going to pay a lot for that.
No, I
So
mean you don't pay. Do you guys pay for Gmail? No. Do you pay for? So you might pay for a little bit of cloud storage on there, right? Like $2 a month. I think I pay, or some minimal, like minimal amount. I pay Apple and I pay Google for cloud storage for my stuff. But like other than that, no, I don't think so. And so search and Gmail and this is a good analogy, I think. And let's also remember, like, go back to the .com. The fiber build out was so massive, we still have excess capacity of fiber that was built then that is not used. And the final thing I'd say is these data centers, right? Well, they're changing the useful life assumptions on these. CoreWeave did it, Amazon did it, Meta's done it, and they've gone up from like 3.5, 4 years. Now they're at 5.5 years, which that means that the gap earnings are overstated, right? Because you're under depreciating the asset. And I think about like, okay, go back to 2022 when GPT-4 came out, and the H100 was the dominant chip then by GPU, right? And since then we've had the H200s, and now we have the Blackwell. So we're like on the third generation, and this is what happens in semiconductors, right? Not that I'm a semiconductor analyst, but that's why they usually don't trade at big multiples, because new ones come out all the time. And so I'm not really sure what this idea of all this capex is in the sense of what, if you build railroad network, right? The railroads will be there even if the guys who built it go bankrupt, or someone will pick up the asset. And you have that for the internet, right? All that fiber, like I said, is still there. I'm not sure here, like, these data centers are full of these servers, and you got to buy new servers, right? And so, it's not like the warehouse that they put them in is that valuable. So what is the long lasting asset? I guess it has to be the IP. Would be the argument that, like, what you're saying. There's applications that are built, and there's things, knowledge that's gained from spending all this power. But I don't know. I also think one last thing on this is, there's a good potential part. You know, you mentioned who's complaining. I think that's a good point that's not being discussed. There's going to be a point that if like it's making it hard for people to get jobs and their power bill is going up 20 to 25% a year, this is going to be an easy political thing to go against. Like I know Trump's in with those guys, but imagine the next guy is like, hey, is this really what you want? You want to have your job taken and have your power, so your cost of living goes up, and so your quality of life goes down. Unless you're just using AI all day or something. And so I think that there is a societal oncoming hurdle that will have to be breached as well. So, right now it just feels like all the excitement is being priced in, and that's usually how these bubbles work. Like people get excited about a new technology, whether it's railroads or it's the telegram or it's the phone or it's the internet, whatever, and they always end up being pretty good for society, but they usually bust out like after this initial hype period, basically.
Yeah. Well, just on a final note, my guess is that at your former employer or my Bob's former employer, there are lots of people who can tell you that the new chip is called a Blackwell, but I bet you that there is almost no one other than the analyst that's responsible for the stock, who can tell you what's different between a Blackwell and something else, like specifically. So you're right. Everyone who owns NVIDIA knows something about it, but they really don't know anything about it. But let's talk about something happier, though. You came on, it wasn't that long ago. Remind us how long ago it was, but you came on and talked about this Better Financial and symbol BTR. And I think it was around like $15,
BETR.
BETR. Okay. BETR. And it was like $15, $17. And now tell us what the story,
around,
tell us what the story is.
As you guys all know, I've been adamantly calling for lower rates for a while. And one of the things that also was going on was rate volatility was dropping. Mortgage spreads are driven off rate volatility. So, the spread between, say, the 7 or 10 year, which is roughly the average duration of a mortgage, a lot of that's driven off volatility. So as rates volley, the MOVE index has actually pierced 70, so it's come down quite a bit. So it was like the combination of I thought rates are going down and I thought mortgage spreads are going to go down. So that meant that refi should take off. And so I bought Rocket Mortgage at like 13.50 or something. I'd been trading it in and out of the year, but then I thought, I was all right, here, I think it's about time. And I bought UWMC, which is another player in that space. And they both, UWMC bought it like $4. I think it got to 7. Rocket was at 13, 14, and it got to size 22. So, really good. I mean, by the way, this is all in the Q3. I bought those in July. And then I knew about Better Financial because I have a buddy who worked there, and one of my friends owned it. So we talked with the CFO in like Q4 of 2003, and it was like, okay, like they had spent a bunch of money. Moss's son gave him $500 million convert, but then forced him to do a SPAC as a condition of having the money. So they came public in 21 during the SPAC craze, right? And they were not ready to be public at all. But the housing market was going bananas. People were refinancing. People were, all this stuff. So they kind of to Bob's point, everyone was getting it. They got to get out there. Well, this is the worst stock chart you'll ever see in your life because it did one of those weird SPAC things where it ripped. Then it got rates stayed higher for longer for a bit, and it's not a good business that was just burning cash. So they had to go from 10,000 employees to 1,000 employees or something along the lines of that. Like they had to cut the whole infrastructure down, but they had this built up technology. Kind of go back to the point of CapEx spending or R&D spending, having a residual asset. Anyway, so in August, I came on here and I was telling friends, I was like, look, no one really knows this stock. It's just a little tiny stock. I was like, this thing can fart and go up to $50. So it was that week. Some guy who was a dealer. These guys are promoting Open Door, make it all, but now went from sub $1 to now around $9 or $10. So it called Shopify Mortgage. It was at 94. Then it hit 50. Now it's 17. Anyway, the point is, there for me. It has a really good return, and I just wanted to like update people on that. These things work. Like this still company doesn't. Is not, I'm not sure how much money they're making. Not at the quality of Rocket. Now you could argue maybe bought out. I'm not sure what strategy, but all I know is that like usual, I'm there early, and once it gets going, that's my normal strategy is to take it off. Kind of like when I sold Bitcoin in 1500 after buying that at 100. That was maybe a little bit early,
Yeah.
but yeah,
So
it's been a good stock.
so BETR that's up 14 today, if I'm seeing this right. So it's $64. So up another 28%. And I guess this is a good reason why you don't short things that just because on valuation or just on because they went up, because somebody might have done that yesterday and been killed on it today. Is there any reason for it that you know of to be up 30%? I mean, you just finished saying that this is the kind of thing that someone can sneeze and go up 25%. But I mean, is that sort of what today is?
Yeah, I don't actually have the answer because like, and if I look here, let's just see what Rocket's doing. Yeah, Rocket's up 2%. Rates are down a little bit, so maybe there's a little bit, but like 3%. So it's just like you got the meme component, you got the small cap component. No, there's nothing that justifies it being up 30%. And there's nothing that justifies it being up as much as it's up. But here, this is the problem. Not problem. This is the thing about small caps, right? And why you should never short small caps because it doesn't take much if you get the secular behind the industry, especially in these cyclical kind of businesses, right? Like mortgage home refinance is completely contingent on macro if you think about it. Now you got to acquiring loans, like servicing loans, recap, like getting people to stay with you. That's all idiosyncratic of like what's your technology, what are your people, what are the pipelines of your business. But ultimately, like if rates go up, it's bad for your business. If rates go down, it's good for your business, right? And so it's kind of like some cyclicals, home related, rate sensitive stuff is very similar. And like these small caps can, if you go from 300 million to 3 billion, $3 billion stock is still a nothing burger, right? But if you owned it at 300 million, that's 10 times. So that's kind of where you come out at. Like this is like a $300 million stock, and now it's probably 1.5 billion. So
Yeah,
I did 35. Rocket's 35 billion for like.
So a similar one to that is Dave, DAVE.
I have some buddies who own that. That was a good one.
My one of my brothers was on the board, and I was an early investor, and I owned it, and this is where selling your winners makes no sense. I must have sold it at, I want to say 40, and I did pretty well. I was like really happy about that. So at 240, all I think of is misery. All I think of is how stupid. So yeah, that's
well, what you can do, and this is what I kind of like our last Friday. I told in our subscriber chat, I was like, you can start selling this here, right? It was at 36, and it was like, and I sold half at there, and then just sold the other half. So yeah, it evens out to I don't know, somewhere in the 50s. But I'm taking 16 to 50 something in a month every day of the week. Like I don't trade crypto, so for stocks, this is about as good as it gets for your buddy B. Bry does mostly macro stuff. So like I don't catch a whole lot of 3 or 4 baggers in the stuff I play in.
All righty. Well, we've gone a little long, so let's wrap it up. I would talk about RFK and autism, but there's really not much to say. There's really not. I mean, it's not really.
It's beyond the purview of our show.
Yeah, exactly. It's the UK did come out and say that there's no basis for Tylenol during pregnancy causing autism. So now there's just going to be a lot of confusion of whether or not Tylenol during pregnancy is a contributing factor or not. And so we have some reporters, some journalists saying this isn't science, this is ridiculous, and then other people saying, well, we should look into these things. So I'm more in the camp of we should look into them, maybe not make announcements until we've looked into them, but let's
But
leave it
everyone's
at
making announcements these days that, whether it's OpenAI or it's the government, everybody's in the pre-running announcement game.
yeah. Let's say it before we know. But we covered a lot today, so we'll cover that maybe later in the week. Ben, if someone wanted to find you on like X, how would they find you?
Just at Ben Bry.
Okay, I know Bob, you're not a big social media guy. I barely use it, so. But if they're going to try to find Wall Street Beats, they'll go to wallstreetbeats.com or passes.com/Wall Street Beats. I'm David Maris for Bob Morris and Benjamin Bry. This is Wall Street Beats.